to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007.
It is Monday, January 19, 2026. The coffee is brewing, the markets are open, and wow, the wires are absolutely humming this morning.
They really are. You know, usual Monday mornings can be a little bit slow, but this feels different. It feels aggressive.
I completely agree. We're not just seeing minor updates. We're seeing huge industrial pivots. We're seeing best ever drill results.
And major resource estimates. It's a mix of everything.
It really is.
And that's exactly why we're doing this deep dive. Our mission today is simple. We're going to strip away the jargon. I want to look at the exact financial figures, the specific drill intervals.
The stuff that actually matters.
Exactly. We need to figure out if these press releases are just noise or if they're actionable signals for, your portfolio.
Separating the fluff from the finance. That's the key.
Precisely. So I'm going to hit you with the headlines, the tickers. Your job is to tell me if the numbers back up the story.
Let's do it.
All right, let's start with what might be the most controversial move of the day. The company is Global Power Solutions Corp.
Okay.
They trade on the TSX Venture Exchange, symbol PWER.
PWER. Got it.
Let's dig in. So if you followed PWER, you know them as a steel manufacturing company. Modular buildings, industrial work, solid, but maybe a little boring.
Sure.
Well, today they dropped a bombshell, a transformational pivot into clean energy infrastructure. They've signed an LOI to develop a modular hydrogen power platform.
Wow. Okay, that is a hard pivot. And honestly, when I first saw that headline, my alarm bells went off.
Right. That's my reaction, too. A steel company doing hydrogen. It sounds like they're just chasing a buzzword to pump the stock.
It's a fair skepticism. I mean, usually you roll your eyes at something like this.
So is there actual meat on the bone here?
Well, you have to look at the macro context of 2026. What's the biggest bottleneck for the global economy right now?
It's power, 100%. Especially for data centers, for AI. We hear about the energy crunch every single day.
Exactly. The grid can't handle the load. So global power isn't trying to invent a new molecule in the lab. They're leveraging what they do best, modular manufacturing, to build the systems for on-site power generation.
So they're not the scientists, they're the hardware play.
They're the infrastructure play. They solve the downtime is expensive problem. If you run a server farm, you just can't afford a brownout.
Okay, that makes sense. Let's look at the specs. They're talking systems from an 80 kilowatt demo all the way up to 1,000 megawatts.
And they want that demo facility running within 12 months. The budget's about 3.5 million Canadian.
That 3.5 million, that's the prove it moment, right?
It is. 80 kilowatts isn't huge, but the key word in the release, the one investors should circle, is modular.
Explain that. Why does modular matter so much here?
Think of it like Lego blocks. If you have to build a custom power plant for every single data center, it takes years. But if you can build these units in a factory, which PWER already knows how to do, and just ship them,
you solve the speed problem. That connects the dots between their old business and this new one.
Precisely. Director Hanif Esmail was quoted on this, and he used a very specific phrase.
I have that quote right here. He said, "This letter of intent is a defining step forward. It provides a credible pathway to scale."
That phrase, credible pathway, that's doing a lot of work. He's signaling to the market that they have a roadmap to 100 megawatts by 2028 and 1,000 by 2030.
1,000 megawatts is a nuclear reactor's worth of power. That's exponential.
It is. The thesis for an investor is a multiple re-rate. Manufacturing companies trade at low multiples. Green energy infrastructure companies, they trade at 20, sometimes 30 times earnings.
But the risk is all in the execution. They have to actually build it.
100%.
Yeah.
The pilot is the hurdle. But if you believe in the energy crunch, this is a company positioning itself right in the middle of the solution.
All right, let's switch gears. We're leaving the industrial park and putting on the hard hats, heading to Ireland.
Okay.
The company is Group 11 Resources Corp.
A familiar name. They're on the TSX Venture as ZNG, and for U.S. listeners, GRLVF on the OTCQB.
Now, Ireland might make you think of Guinness, but geologically, it's a zinc powerhouse. And ZNG just dropped news they are calling their strongest drill hole since the company was founded.
And hyperbole is common in this business.
Yeah.
Every CEO thinks their latest hole is the best thing ever.
But this time
they might actually be underplaying it.
Let's pressure test that. Drill hole 25-3552-51. They hit 29.9 meters, grading 15.3% combined zinc and lead.
Okay, stop right there. Let's put that in context. 15.3% is incredibly rich. Many mines operate profitably at 5 or 6%.
So this is high grade.
Very high grade. But the width, 29.9 meters, that's the kicker. That is roughly the height of a 9-story building.
So a 9-story building made of high-grade ore?
Exactly. And it's not just base metals. There's a precious metal kicker in there, too. 552 grams per ton silver and almost 0.7% copper.
552 grams of silver. That sounds like a lot.
It's enormous. Over half a kilo of silver in every ton. That's not a byproduct. That drives serious revenue. The CEO, Bart Jaworski, noted some sections ran up to 4,260 grams. That's bonanza grade.
But here's the technical question. What about true thickness? Sometimes the drill angle can be deceptive.
Great question. And they addressed it, which is key for credibility. They estimated true thickness at 90 to 100% of that intercept.
So they drilled across the structure, not down it. What you see is what you get.
It's a thick, massive sulfide zone. And the location of this hole, an 80-meter step out to the southwest, that's also huge.
A step out is always a bit of a nail-biter, right?
It is. You're drilling away from your known mineralization. And they didn't just hit it, they hit their best hole ever. It suggests the heart of the system might be where they're heading now.
And they mentioned a second hole, finding a significant new zone in a 400-meter gap.
That's the district scale validation. You've got parallel structures. You're not looking at a single pot of ore. You're looking at a potential camp. They have 4 rigs turning now.
So for Z&G, it's not, is there zinc here anymore? It's, how big is this thing?
Exactly. It's shifted from a discovery story to a scale game.
Fantastic. Okay, from the thrill of discovery in Ireland, let's move to the security of definition in British Columbia, Endurance Gold Corp.
Ticker EDG on the TSX Venture and NEGF on the OTCQB.
Discovery is exciting, but eventually you have to do the math. And Endurance has officially moved from explorer to resource owner.
This is graduation day for a junior miner.
Yeah.
You move from the speculative phase, from hope, into the asset backing phase where you have hard numbers.
So let's look at the report card. Total inferred resource, 1.45 million ounces of gold.
Which is a very, very solid starting point. Anything over 1 million ounces starts to appear on the radar of mid-tier acquirers. You become a meaningful asset.
They broke it down into open pit and underground. 1.12 million ounces near surface. Why is that split so important?
It all comes down to CapEx, the cost to build the mine. Open pit mines are generally much cheaper and faster to get going. Having that much gold near the surface gives them a really strong starter pit scenario.
Right. Makes the economics look much better from the start.
It does. And speaking of economics, the CEO, Robert Boyd, dropped a metric I want you to unpack. He said the discovery cost was about $9 Canadian per ounce.
$9 an ounce? That sounds incredibly low.
It's exceptionally low. The industry average can be $20, $30, or $30, even $50 an ounce. $9 implies 2 things. 1, management is very efficient with their budget. And 2, the geology is cooperating. They're hitting gold without wasting holes.
We should clarify inferred resource, though. This isn't proven yet, is it?
Right. Inferred is the first category of confidence. It means we're reasonably sure the gold is there, but you need to do more drilling to tighten it up and move it to indicated. But starting with 1.45 million inferred is a fantastic baseline.
And the next step for them is a PEA, a preliminary economic assessment.
That's where they put dollar signs on the dirt. With road access and hydropower nearby, which they have, that PEA should look very interesting. EDG just de-risked their project in a big way today.
All right, we've done hydrogen, zinc, and gold. Let's head south to Mexico for some silver. Our 4th segment is Kingsman Resources Ltd.
KNG on the TSX Venture, KNGRF on the OTCQB.
So they're working at the Las Coloradas project. It's a historic district, and the headline is about high-grade silver continuity at depth. But what really caught my eye was this detail about old workings. It's like a detective story.
It really is. This is brownfield exploration. You're exploring where others have already mined.
So they drilled hole LC25005, hit 15.7 meters of 74 grams per ton silver equivalent. But inside that, a massive spike, 1,379 grams per ton over about half a meter.
And just a quick note, silver equivalent just means they've converted the value of all the metals, gold, lead, zinc, into an equivalent value in silver. And yeah, 1,300 grams is huge.
But here's the detective part. They drilled another hole 70 meters deeper, and they hit old workings. They drilled right into an empty tunnel from, 100 years ago?
And you'd think hitting ear is a failure, right? But in this context, it's a huge confirmation. It tells you exactly where the high-grade vein is. The old-timers didn't dig tunnels for fun.
So they found the old treasure map, basically, and it showed them where to drill next.
Precisely. They confirmed the structure and then proved the mineralization goes way deeper. The deeper holes still hit over 1,000 grams per ton. This proves the system is open at depth.
The company president, Scott Emerson, had a great quote on this. He said the results show the silver is increasing in width and is open at depth and on strike.
That open at depth part is everything. Historic miners often stopped when they hit the water table or the rock got too hard. Kingsman is proving that the treasure chest still has a bottom half that's untouched.
Incredible. Okay, one final stop. Let's go to the other side of the world, New South Wales, Australia. Inflection Resources Ltd.
Trading on the CSE as AUCU and the OTCQB as AUCF.
This story is all about partnership and scale. Inflection is hunting for copper gold, and they're doing it with a giant in their corner, AngloGold Ashanti.
And you really can't overstate the importance of that name. AngloGold is one of the biggest gold producers on the planet. They don't partner with juniors unless they see potential for a massive Tier 1 deposit.
Well, they might have found the start of one. They just announced high-grade gold in a brand new target area. Drill hole TRND H032.
Catchy name.
Rolls right off the tongue, doesn't it? But the result was 3 meters grading 7.72 grams per ton gold. Now, let me play devil's advocate. Compared to the 30 meters we saw in Ireland, 3 meters might sound a bit thin.
It would if you didn't look at this wasn't a confirmation hole. This was a wildcat scout hole in a completely new area, 5.5 kilometers south of their last discovery.
5.5 kilometers, that is a massive gap.
In geology, if you have smoke here and then smoke 5 kilometers away, the fire underneath is probably gigantic. It suggests a district-scale system. You're not chasing one vein, you're chasing a monster plumbing system.
And their method is interesting. They're using air core drilling.
Think of it like a shotgun versus a sniper rifle. Air core is fast, it's cheap, and it lets you pepper an area with holes to sample the bedrock quickly. They're planning 83 of these holes starting next month.
So they're basically swarming the target to map it out.
That's the plan. CEO Alistair Waddell called it a significant development that opens an area that has never been drill tested before. And he's right. Hitting nearly 8 grams in a blind scout hole is rare. It's a huge validation.
So let's bring it all back home. We've covered a serious amount of ground today.
We really have. It shows the diversity of the small cap world right now. We started with PWER, a pure reinvention play, pivoting to solve the data center crisis. Then ZNG in Ireland, the classic discovery story.
We moved to EDG in BC for the definition phase, locking in those 1.45 million ounces. Then KNG in Mexico, proving that brownfield potential. And finally, AUCU in Australia, the huge scale play backed by a major.
It's the full life cycle of the market, all in one morning.
It really begs the question, though. In a market like this, where should you be focusing? Is it the safety of defined ounces like endurance, or the blue sky potential of a new hit like inflection?
That's the eternal risk-reward trade-off, isn't it? But I'll say this, the market hates uncertainty. Today, endurance removed uncertainty. Global power embraced a new uncertainty for a potentially higher reward. But the common thread, all 5 of them delivered data, not just promises.
And that's where the real homework begins for everyone listening. The symbols again were PWER, ZNG, EDG, KNG, and AUCU. Don't just take our word for it.
Pull the releases, look at the maps. Stay skeptical, but pay attention to the drill bit. That's where the truth is.
Couldn't have said it better. Thanks for joining us for this deep dive into the breaking news. Stay informed, stay curious, and we'll see you next time.